Hey Rebels, welcome back to the channel. We're going to do something a little bit different today. I'm on my way to work, but I still wanted to give a shout out and maybe talk a little bit about the markets today. There's not much to report. We've been talking for the last weeks and months about how we're likely to entering a bear market, and I think we've basically, hit that nail on the head. And, we're kind of beating a dead horse at this point. There hasn't been much changing. There hasn't been much to report because we're still in a single swing direction to the downside. We do have about 6 weeks to the downside in one swing direction, and typically 7 to 10 is considered overextended. That's one of my metrics that I like to use for overextension, not necessarily the RSI. All those can be useful on a weekly time frame. So we are at 6 weeks down right now, which is nearing overextension, and we had that capitulation several weeks ago. So there is shorter term signs of seller exhaustion. So that is a good sign, I suppose. But we are also in a bear market, and so what you'll notice is that the downturns are much more aggressive and the rallies are shorter lived and they grind, and it's not an easy trip up. The markets are having a much easier time going down right now. These are characteristics of a bear market, and a lot of people don't want to hear that. And the reality is that markets go up and down. There's money to be made up and down, and you can have different strategies for both, really. So effectively, at the end of the day, we're still trend following. We're still following momentum. Those are powerful characteristics of the market that you can form strategies around. And so with the type of analysis that I do, it makes it very accurate to, I guess, put the probabilities on your side that you are accurately following what the market is telling us. So yeah, that's basically what I have there. The other thing to note is that the volume has been increasing to the downside. So last year at the peak, we had very low volume, and the volume was declining the entire time. The exchange volume was declining the entire time. We were not getting any strength there. And then once we started to sell off, the volume started to increase, telling us that the interest in the volume is to the downside. So really, there's not a lot to report. For me, we're in a bear market. This is going to last some time. If we follow the cycles, and if the timing is similar as it has been, the 5-year cycle seems to be out the window right now, and so we have to go with what the market is telling us. I don't believe that we will just follow a 4-year cycle forever, but those time frames can give us turning points, right? So even at this last peak in November of 2025, we had talked about, even if this is not the end of the cycle, it is somewhere where you would expect a turning point or a pause, and we actually did collapse from there. So that did confirm that we were in a bear market. So what we can look for is in Q3 of this year, a turning point to the upside. Whether we see all-time highs from that point, we'll have to pay attention. We'll have to see how the market reacts. And it's possible that we don't actually see all-time high prices, but there is still tradable ranges right there. So the last thing I'll leave us on is the USDT dominance in a raging bull market. We noticed that very early from the higher low in August of 2025, and we've been basically, that was a bull market setup, and we've been in a raging bull market ever since. We're actually it was in a stronger position than the last cycle. We had talked about the similarities in the pattern there, much stronger. So now the interesting thing is to watch how the market reacts to news about the war. I mean, I'm really not too up on that, but yes, there's been lots of talk on war and Trump attacking Iran or something like that. Like I said, I have no idea. But you can see that the market's not collapsing on that news. Okay, telling us that at least in the short term, seller exhaustion, more signs of seller exhaustion. We're not going down on the bad news. The market is not finding that as another excuse to completely dump, right? So until we basically get out of this trading range that we're in, because we've been in a trading range, kind of a contracting trading range for the last several weeks, but we haven't really moved anywhere on the weekly time frame. We've just been in a downswing. So it's one of those expect more of the same scenarios. So I think I'm going to leave it on that. There's not a lot new to report, and that's kind of okay. A lot of people want to be up to date on the market every single day and try to get really granular and try to outsmart the market or be smarter than the next guy. And we really don't need to be smarter than the next guy. Warren Buffett says we don't need to be smarter than the others. We just need to be more disciplined. And that's really it. So if you come back to the markets every week and you study and you will start to get in tune with the rhythms of the market and with the sentiment, and you will start to recognize how narrative does not push the price, things of that nature. And so you can basically just focus on your discipline of creating a strategy that can be profitable, and that's where you can put your focus, right? And you can not try to be smarter than the rest of the market and just try to basically hone your skill. This is a lifelong skill, and it has the ability to change your life. So I'm going to end it with that. Thanks for making it this far. Doing it just a little bit different this today, just because my weeks have been actually just crazy busy. But I always want to pop on here and just share my views and tell you where I'm at with things. And so yeah, leave a comment down below. That's always appreciated. Also, let me know if there's any videos that you want me to do, any markets that you want me to cover. I have been building a video for some time to go more in depth on the larger macro cycles with the real estate cycle and things like that, and also with our projection models that we've used with a lot of success in previous cycles. Those are coming along, and so I'd like to share those as well. We actually had one that we were following last year that was giving us a lot of indication on where the market was going to go, and we started to diverge from that model, which was one of the signs, because sometimes a failed signal is also a signal. So when we diverged from that projection, that was another sign that things were different this time, and we were not likely to see higher prices. Although everyone was projecting that, everybody was predicting that, we actually broke down from our predictive cycles, and that also gave us an edge, understanding that things were a little different. So I want to share those predictive cycles with you next week, because I think we finally basically found a match on that. So anyway, more details on that next week, but leave a comment down below. Please like and subscribe to the channel, and yeah, leave me some ideas for some videos that you'd like to see, because I'd like to kind of do some more custom videos as far as what the viewers want to see, because I know these videos can be kind of boring, because that's kind of the catch of it, is like the weekly analysis. You don't really need to analyze the markets every day. It's not super useful unless you're day trading, which I don't do. I prefer swing trading over longer periods of time. I think that's my style. So you can use the analysis for day trading, but anyhow, this video is getting a little long-winded. Until next time, stay rebellious, my friends.